Kenya has been spared in the latest trade tariff adjustments by the United States, imposing higher import duty rates from 10 to 41% for 69 global trading partners, starting in 7 days. But with the impending expiration of the African Growth and Opportunity Act, AGOA, the Kenyan textile industry is staring down a crisis, putting tens of thousands of jobs and billions in trade at risk. As the U.S. tightens its trade policy, the future of Kenya's apparel industry hangs by a thread, as Ashley Atieno reports.
For more than 2 decades, Kenya's apparel industry has thrived on one crucial advantage: a duty-free access to the United States market under AGOA. It's what made Kenyan jeans, shirts, and uniforms cheaper and more competitive. But the clock is ticking as AGOA is set to expire in September.
If you are exporting to a country at duty-free and other people are having to pay duty, it means you're more competitive. You have an advantage over them. Once that is eliminated, then we have to face competition from everybody else.
AGOA, which provides duty-free access to the U.S. market for eligible African countries, has supported the development of Kenya's export-oriented apparel sector. More than 66,000 people are employed in export processing zones, according to government data.
Now, if AGOA lapses, well, on that end of in September, it might, because indicators are showing that that might happen. If that happens, it means we have to go back to the drawing board and ask ourselves, can Kenya sustain its textile industry? Will investor be still willing to invest in Kenya textile industry? Do we have new markets? Can we still export to the US with the tariffs and the duties and still remain competitive?
And that global competition is fierce. Producers from Asia, already more efficient, now stand on equal footing with Kenyan exporters. The wider ecosystem of logistics, trade, and investment already showing signs of slowdown.
One of the notable effects that they might have if our competitive in the US market is going to substantially shrink is that all the imports that we have been importing to aid in the textile production, the machines, the intermediary goods, are going to reduce substantially. And therefore, of course, the effect will be less business for the port. Less business means less people employed on the same.
For thousands of Kenyan workers, the threat isn't abstract, it's personal. End of AGOA might seem small, but on the factory floor, it could mean the difference between a paycheck and a pink slip. Ashley Atieno, NTV.